Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Wednesday, and we are now on the 1st of September, 2021. And wow, there's 4 months left in the trading year. Can you believe that? Something new. I want you to listen to the sound. You have your intro, then I come on. Everything should be now modulated the right way. I know there was a humming yesterday in the software that we found. We have fixed that, and it's a new piece of software. If you don't like it, let us know. You can write a note there. But if it sounds better, this is as good as I can do from a home studio where we're all stuck temporarily, and we'll see what goes on there. You're going to also see a special that I bring on tomorrow in the way of an advertisement for the Labor Day holiday, so look forward to that. So I'm laughing in a way. President Biden is meeting with the president of Ukraine, and he's making him assurances that the U.S. will be there for Russian excursions into their country, and they're going to be to stop it. Can you imagine, after this Afghan experience, sitting down face to face, looking at the president of the United States, hearing this, and inside, what are you thinking? I'll let it go at that. So as we look at the board, a mixed board, Tesla down a little, XHB, the home builders, they're still doing very, very good. You can see that the bonds, well, they're stable. Remember, Friday is the big number. We're going to get the jobs data report. Today we had the ADP report, and it was a terrible miss. The market was way off. It was about 60% of what the market was looking for. That's not the very best number. If you've been looking at Chinese numbers, they've been terrible out of China, but how much of this is COVID? I'm reading articles that in the U.S., as bad as the COVID is in the South, and hospitals in areas where the unvaccinated are flooding the hospitals. In areas where people have been vaccinated, they've seen a peak already. I don't know what's going to happen with our children, because I know that the schools, I'm reading around the country, how many of them are getting COVID outbreaks, so something to be concerned about. When we look at ARK, we had that one stall. We pulled back, and today we broke through again. Now, you'll see in moving averages here in a moment that this, by the way, puts the market back in an uptrend in the sense of higher lows, higher highs. Now, with the moving averages, you're back to the 200-day. So you hit it, you backed away, you finished today about 10 cents over that, but that's basically right there. So now the question is, what next? Should the market decide to move out to the upside, then I'm looking for the 125.93. The trends are up. Give the market the benefit that it did get through that resistance, but you'll know you have a failure for the moment on your hand if you get back under 120.72. Other than that, it's still looking good and overbought. That is why I still am like this. Is it trying to sucker you in an overbought market or not? I don't know. But the trend is certainly to the upside. In Apple, overbought, fighting a big battle at the upper Bollinger Band. That's to be expected. This is September. We're going to get all the new news about the new phones, the new watches, new products that they're coming out with. It should be an exciting month for Apple, and as you can see, you keep hitting new highs. So very, very bullish. Yeah, you can get pullbacks, but it's still very strong on the charts. In PAVE, I tried to point out to you yesterday how President Biden had hurt this market. Why? Because of what he did and how it hurts the votes that have to come up for this, for the infrastructure plan, and how much he's weakened himself within Congress with the Afghan pullout. We all knew we were pulling out. It was the way it was done. I don't think anybody in America is arguing that we didn't say we were going to pull out. I don't think any of us thought it was going to be in the manner that President Biden chose. And that's where the hurt is coming in. Now, can he get over this? He's still got a while to go in his times. We will find if he's won the public over or not with the midterm elections. Until then, he's the president. But that doesn't mean there's not some pain, and if you're watching, you're already getting a lot of discord in Congress with his pick to Japan, Rahm Emanuel. We have the other factions coming out solidly against it. There's many parts that are coming. He's given strength to his competition with all this. In XLI, You've got a higher high, a lower low, you're right back to neutral. This market, when I was doing my morning subscriber video, I was telling traders you got to stay away from that for the time being, that it's just not acting like a market that wants to go anywhere. The semiconductors hit at their stride to the upside back here. Now you're in a consolidation phase. If you should break through the lows of Tuesday and get through this 285 cents, then I'm going to look for it back to 196.57. Conversely, and this is a big issue, if you look at the slow stochastics, for today, both numbers are over 80. They were both over 80 on Tuesday, and watch this, both over 80 on Monday. So what they did today is they embedded, which tells me that even if this market breaks through that, the pros are going to buy this market until that red line closes back under 79, looking for an attack of the upper Bollinger Band again. Plain English, I'm bullish. PODX, this is where I was looking for the market to run to, the 18-day average of closes. It's now game on. If the market's going to be bearish again, what has to happen is you have to take out today's low of 1020, stay down, and then you're putting into play the possibility of 954. If you break through that low, what you don't want to do is get back over what today's high is. Pretty simple. XHB, bullish but overbought. Higher lows, higher highs with today's action. You've already hit upside targets and you're overbought and not even trying yet to embed. You're just overbought. In the energy sector, so we saw the OPEC Plus meeting. It lasted all of less than an hour. And they are going ahead with the 400,000 barrels a day increase. They are in addition going to meet on October 14th to discuss the next 400,000 barrels. As long as prices in crude are in the mid-60s or higher, why not? They're going to do that. Now, you're also going to see U.S. production, whether you believe it or not, is going to pick up. Maybe not from the majors, but all the mom and pop operators are taking advantage all over, and those barrels count. And they'll be coming on, and you watch what happens there. So we're going to see much more oil coming to the market soon. Is that a reason to be bearish? No. I'm to the other side of that. I want the COVID to peak everywhere, and I want demand to pick up in everything. Just the opposite. Emerging market ETF. Well, today's high 81.59. The goal, when you took out an outside day down yesterday's high, you take that out, the goal's the upper Bollinger Band. Bingo. I feel darn good about teaching that. If you've taken my courses, you've learned that. Now in gold, we have been stuck right where we've been talking for 1 week. This market now for the past 4 business days has just been trading between and against the 200-day and the 100 back and forth. If it can launch here, and there's no reason for it not to, take a look. Both numbers are over 80 today. They were both over 80 yesterday and the day before. You're embedded now. So when you're embedded, as long as that red line doesn't close back under 79, I have all systems go to the upside. My target now is 171.83. I think this will prove to be a support zone until that red line closes under 79. In the miners, well, I'm not bullish because of the chart. It's overbought. I'm bullish in the sense of the chart action, but overbought keeps me away from it. This has got to be looking. It's interesting that the miners aren't leading the bullion higher. It's the bullion leading the miners higher. In TLT, how do you play this until you see the jobs data? Now, I don't expect that the jobs data in any manner is going to do any more than say it's green light right now. The Fed at their next meeting can give the go-ahead for the tapering to begin, give us a date when it starts and everything, or it stays on pause because the number was another disappointment. I'm hearing anywhere from 400,000 to 1 million new jobs, with about 778,000 is the mean, right in that area. So we'll see what it does. The trend is down with lower highs, lower lows. The bias is up and momentum is pointing down. The lower it falls, the higher interest rates would be going. In the euro, all you did is get up to the upper Bollinger Band, and you should stall right there now, so I'd be watching that with interest. Remember, if you're looking for more technical information on charts, our guides, volumes 1 and 2 of technical indicators, is something you should look at. Our good friends at Modern Trader work with us in putting this all out, and these are the best write-ups I've ever seen. So I'll leave it at that. I go all over the internet looking for things, contacting firms for new things to offer. I've never seen anything as good as this. So you take it from there. We don't charge for it. It's totally free. All you need to do is go to our website at www.iraepstein.com. And when you go there, look on the bottom right, you will see free offers. That'll do it. You can always call my staff. They'll work with you as well. In the meantime, I'm Ira Epstein. You have a good day.